What's going on, everyone? I posted a video last week or about a week ago saying, look, this is the dip. We're going to buy the dip. We're going to keep on buying the dip because it's going to bounce. I could have went and I could have just started saying, oh my God, the market's going to crash. I could have made some eye-popping colors, made like a bunch of fear-mongering thumbnails and names and everything for some clickbait. I could have gotten a bunch of views. I could have made people fearful. I could have spoke to people from like a lens of fear that a bunch of these other YouTubers are doing. But no, I'm a trader. I'm here to actually try to make you guys money. I don't have a reason to try to clickbait people into watching my videos. The people that know what I'm really about, you guys are watching the videos. You guys bought these dips with me because you guys follow me on Twitter, where I post all of my trades. First of all, I post all of my swings, all of my trades, everything completely on Twitter. All right. Here's my Twitter. You can see, look, I'm buying dips. Boom, buying dips. Leave the economics to the side when it comes to trading, people. This is not like the economy and the stock market are completely different. Boom, I bought the dips here, posted some more trades. Boom, bought the dips. Guys, I post all of this completely for free on Twitter. I call out every single bottom. It's not like this isn't... every single time we've bottomed out like this, I posted it. I come to YouTube and I share my thoughts with you guys. But please, guys, if you are watching my videos or in general, I want you guys to understand something very, very important. You can watch all of the freaking YouTube videos you want. You could watch all of my content. You'll know, oh, okay, all right, Hamid is probably going to say, buy the dip here. Okay, I'm going to buy the dip. But then the fear of losing some of that money, the fear of seeing the red on your portfolio is going to make you, it's gonna make your stomach churn. And I understand that. But you're embarking on a journey that 95% of the entire world cannot do consistently. So how are you supposed to go and do this in a tangible way where you can start making life-changing money consistently from the comfort of your own home, working for yourself? How are you supposed to do that without going through some emotional pain at first? How are you supposed to do that without stomaching some losses or seeing some red on your portfolio? That's never going to happen. If you cannot overcome the $100, $200, $1,000 loss, what the hell do you think is going to happen when you're down $10,000? What do you think is going to happen when you're down $50 or $100,000? You're going to lose there's levels to it. Okay. So at first you have to just embrace it. You have to say, look, okay, cool. I'm down $50. Cool. I'm down $100, but this is building my emotional stamina up to be able to be down $1,000 and not lose my crap, to be down $10,000 and not lose my crap. So guys, trading is very, very, very emotional. Trading is probably 75% mentality. You can learn how to read a chart as good as you want. It doesn't even matter. There are people on Wall Street right now. There's people on Wall Street working on Wall Street for 40 years, 50 years. Garbage traders. You know why? Because they've never overcome their emotions. And once you focus on your mentality, once you focus on reframing losses in a positive way, overcoming it, and reminding yourselves not to feel like down or feel disgusted by them, that's when you're going to grow as a person. At this close to all-time highs of the stock market, I just had one of the biggest trading weeks of my life. And it's because we were just timing this bottom perfectly. Posted it all for you guys on Twitter, shared all of my thoughts with you guys. It's very simple. Control your emotions, have a game plan, enter trades with proper risk management, and you'll be fine. So yeah, it's a long journey, but you guys have to keep that in mind. All right. Now let's go ahead and take a look at the NASDAQ, the SPY, the IWM. I'm going to take a look at Bitcoin. Obviously, Bitcoin can fall back down. I'm going to look at everything, and then we're going to go over the stock market. And I hope you guys enjoy the video. Let's get started. All right, guys. First of all, what a beautiful rally this was. Okay, spectacular bounces off of these lows. Guys, I share this in every single freaking YouTube video almost that I post when we're at these bottoms. When the SPY, the NASDAQ, or the IWM are extremely oversold to the downside from the B bands right here. Let's relax for a second, all right? SPY, one close outside of the lower level of the B band. Two closes outside of the lower level of the B band. The third day, it opened outside of the B band, okay? If you are not loading up on calls for a 1 or 2 months out, when else would you want to buy calls? If we are so algorithmically overextended to the downside, when else would you want to buy into calls, guys? Would you want to buy into calls over here when we're at the tops? Because we look bullish, that's when you want to buy into calls? No, you have to realize that hedge funds and people that have billions of dollars under management, they're not looking to buy in heavily when the stock market is at all-time highs, people. If you have to put yourselves in the position of hedge fund managers and banks and think about logically, okay, look, I have a bunch of billionaires that gave me a bunch of money and I need to make them money consistently every single month. Okay, how am I going to do that? Am I going to put friggin' $5 billion at the top of the market? No, I'm going to sell. I'm going to take some profit and I'm going to rebuy as we go lower. Okay, that's exactly what happened here. We were extremely overextended with everything. We were rallying so vehemently. We rallied so vehemently from this past bottom, which we called. We were talking about this bottom. I was telling you guys to buy this dip, buy this dip, buy this dip. Everything looks great. Look what happened. We broke out into new all-time highs when this happened. And then we, sold off just a little bit and came back down. And the reason why this trade almost always works, has literally almost, for the past 2 years now, this has been 100% trade. When we are extremely overextended to the downside in a bull market, the lower level of the Bollinger Bands, when you fall out, that is a beautiful buying opportunity. And it's just math and it's just statistics. If something has such a high level chance of likelihood, then you have to take that trade. But what ended up happening was that there's a bunch of people on, online that are not good at what they do. They're good at garnering attention. So what they do is they know that people are fearful and they know that, logically, the economy is not doing too well, blah, blah, blah. Lots of, coronavirus and economic turmoil for a lot of different people, right? So they attribute that to the stock market, and then they try to make YouTube videos to get some views because they don't know how to trade or they don't really know how to make money to begin with. And they like to adhere to people's economic side and the logical side of people's brains. But trading, you have to understand, is not, it's not as logical. It doesn't make as much sense in the grand scheme of things when, in terms of economics, the stock market does not make sense. Okay, so that's the gap of what people are doing, and then they also know that, hey, if I, oh my God, we're falling, oh, the market is crashing, blah, 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 that's an extra 1,000 views on their YouTube video, and they can't make money otherwise trading. So it's like, to pay the bills, they need to get something. They need to get some views. So I understand that. But my goal is not to get views. My goal is to make people money. All right. So anyway, that's my rant. The SPY oversold, bounce, boom. Okay. So now the levels for the SPY, we need to hold 468.27 support. So again, this is look, if this was a bear flag, right? The bear flag would fail at the 50 or the 618% fib level. Okay? So a bear flag, obviously you guys know it's a bearish pattern, blah, 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 and it usually signals downside. This bear flag broke, and this was a V-shaped freaking recovery. Okay? So, boom. All right, 468.27 is a very important level. And then, of course, 470, and then the next all-time high is at 473.54. Those are the levels on the SPY. Okay? Now let's take a look at the NASDAQ. The NASDAQ is not as oversold on the MACD as the SPY just was, okay? So you can see the SPY much more oversold on the MACD, which means that there isn't as much room to go. But when compared to the NASDAQ, so when compared to the NASDAQ, you can see that the MACD on the NASDAQ is not as overbought. The line has not crossed above as much as the 1 second, my battery is almost dead. All right, so the NASDAQ MACD is not as overbought as the SPY. There's still much more room to go, and we still have not crossed above the 786% fib level as the SPY did. You can see that the SPY regained this 786 level, held, right? The NASDAQ just held the 618% fib level. So that still leaves a ton more room to the upside, potentially to at least the 402.33 level, which is this 786% fib level. And that's basing it on the strength of the SPY. So if the SPY got to that level, this Fibonacci level, that means that the NASDAQ could most likely get to that level as well. Very high percentage trade. So of course, you know, these are the levels of support down below: 390, 380, 390, 732. If we come and retrace back on any of the indices, I mean, this was a really, really strong rally so far. Another day or even a day of red is not the end of the world. So yeah, so NASDAQ as well, oversold outside of the lower level of B band. Opened. Look at this candle the next day, opened outside of the lower level. The third day, closed outside of the lower level. The fourth day, opened outside of the lower level. Guys, if you're not buying these dips over here, I don't, like, this is something that I've been sharing tons of times on the YouTube, on the channel here. Perfect buying opportunities for 1 to 2 months out. So, I mean, you can't really, it's a layup trade. This is a layup trade. Next time this happens, you should definitely look into that. Anyway, so there's the NASDAQ. Let's take a look at the IWM. So the IWM obviously fell the hardest, right? Because the, you know, the Omicron news as well, right? So the MACD, you could see, you know, from this rally, when something falls extremely heavy, right? When there's a lot of elasticity in the price, then the momentum becomes much more exaggerated, right? So this momentum, obviously, it shows that the MACD is much more oversold than, for example, the NASDAQ. The NASDAQ was very tight. It was compressed. So any fall or gain, etc., that's why the MACD is not moving as much, because it's very tight, right? But the IWM completely crapped itself, right? Very elastic in its price movement, which is why the MACD is showing much more overbought conditions than the SPY or the QQQ, right? So the IWM currently closed above the 382% fib level. The 786% fib level on the IWM is 237.76. So if comparably the IWM gets to where the SPY is today, that is a $12 increase, or how much percentage gain is that? Approximately a 5.4% gain. Okay, so guys, there's tons of more room to the upside on lots of these tickers, lots of these names. Again, all right, let me clean this up real quick. Let me just show you guys. Guys, please, guys, if you are not buying these dips, look how beautiful these dips are. You could have just bought the dip right here. Any dip. First of all, we were calling out all of these bottoms. We called out the bottom over here. We sold it. It gapped up. Okay, we made tons of money over there. Same thing over here. Same thing at the bottoms. We just kept on, like, we knew when to buy the dips. I posted them all on Twitter. Right? Anyway. You could have just bought it right here at the close today. And at the close on November 26th, sorry, for 2 months out, for 1 month out, at the money IWM calls, you would be profitable today. You know why? Because algorithmically, this is not supposed to happen. And algorithms, banks and hedge funds that have hundreds of billions of dollars under management, they know, and they have algorithms in place to make sure that when certain conditions are met in the market, they bulldoze towards that opportunity, and they start scaling in and they start buying in at those opportunities because they have such a high success rate. If you look at any single time this has happened on the IWM, the SPY, or the NASDAQ, 100% success rate over the past 2 years, past year and a half, anytime since coronavirus has happened, 100% success rate. Okay, so because we're in a bull market. Okay, so yeah, please. Yeah, I mean, there's not much else to say. There is clear resistance now on the IWM. If we reclaim 227.38 tomorrow, that is going to be very, very bullish. That's going to be very scaryishly bullish because that puts us above this very important trend line. I had this trend line drawn out for a while, right? But as you can see, when we gap down below, it began acting as resistance right here on these 2 days. Ooh, didn't mean to move it. It acted as resistance on these 2 days, right? And now we're about to retest it. So we have to see if that is going to be a hindrance to our move upward on the IWM. Will this be a bit of a sign for the markets to, you know, take a breather here on the if the IWM shows some resistance, maybe the NASDAQ and the SPY can also show some resistance. We just have to wait and see. But those are the levels. All right, and 225.11 is also, you know, the fact that we closed above that level. It's very important. The 382% fib level. So yeah, we just have to keep on watching for the overall indices, and that is my analysis for the overall indices. Let's go ahead and take a look at Bitcoin. All right, here's the chart of Bitcoin. Okay, lots going on here. Let's dive into this. Okay, so first of all, a few days ago we wicked all the way down to 42,000. Okay, so if you've been watching my videos, when we do have an extremely big wick to the downside, what almost always ends up happening is we reclaim 50% of this wick. Okay, so if we were to do that, we would come down to at least 45,600. Okay, so if this is the same as every other time, okay, when we do have a huge wick, the wick, at least 50% of that wick comes back and gets retested. Okay, so that means that Bitcoin is going to come back down to around 45,000 to 46,000 at least. All right, and the reason why that might happen is it's kind of scary. What might end up happening right now on Bitcoin is because we had a huge, major drop. We fell very, very sharply. But this entire drop could not bring the RSI into oversold territory. So what you have to think is, if a huge drop like that did not bring Bitcoin into oversold territory, which is a good buying opportunity, there has to be another drop, right? There has to be another dip that would be a bit worse in terms of, you know, this consolidation. It would have to fall much lower to bring this RSI down, because the RSI is showing a lot of strength, but the price is showing a lot of weakness. So that is the number one. You have to just look at this. I mean, when you look at charts enough, right, you'll see that when a stock is falling very sharply, the easier it falls into oversold territory, that's a much better sign that it's, you know, the weakness is over. It means that, you know, it's time to start buying into the dips. But the fact that we fell very sharply, we still could not fall into oversold. What was this? The RSI over here was 32, or sorry, no, it was 31.5. It couldn't even break 30. There's a lot more room to the downside potentially, right? So that's my second reason. Number two is the MACD. We have, look at this MACD right here. We, you know, sharply fell, right? Great. We sharply fell right here on the MACD. It was the lowest day on the MACD. We started to show lots of strength. So here's the discrepancy. You saw how there was, the RSI showed lots of strength, but the price of Bitcoin was falling, right? Now, when the MACD is showing lots of strength, but the price is not showing lots of strength, that is terrifying. That is not a good signal at all. Okay, every single time this has happened, Bitcoin has fell. And when there's three reasons why I think Bitcoin is going to fall back down. The only thing that'll really save Bitcoin right now is if 52,900 needs to break and hold. The fact that we have almost completely eradicated this oversold condition on the MACD, because usually when the MACD is oversold, it means that there is tons more room to the upside. So what is the tons more room to the upside? We only bounced about $2,000. That is freaking garbage. And that means that Bitcoin wants to fall down a bit lower. All right. And another reason why I think that Bitcoin is going to fall down a bit lower into this December is because every single December at the times of, Bitcoin rallies, it's been driven by retail and it's been driven by rich people that are in tune with this market. Okay, so since 2011, 2012, when this market really began, and it started to show a lot of people in Silicon Valley, a lot of drug dealers, a lot of retail began to enter this space, pattern recognition was much easier. Okay, so, oh wow, it rallied in 2013. Okay, it's going to rally in 2017. Okay, and then people are entering December with that same notion. But I am very skeptical about a rally right now, only because banks and hedge funds have entered. And banks and hedge funds, they want to kill retail. And they know that retail is expecting, okay, if this happened the past two times, it's definitely going to happen now. But this was literally this was a very, very clear indication of banks entering the market space now. And you can see that a few days ago, the MACD was just garbage. Look at this. The MACD was, let's not even look at anything else here, right? The MACD was overbought like crazy while we were sitting on a horizontal level of support, barely holding on for dear life, okay? The RSI was chilling at almost 50. The MACD, look how stupid the MACD looks. Algorithmically, that is not a good buying signal. Algorithmically, it's not, you want to get into securities at algorithmically favorable positions. So when the RSI is oversold, when the MACD is oversold, when we're extremely oversold outside of the lower level of B bands. But none of that was the case back here. That's why we collapsed a bit. And now we're consolidating here. And that's why I think we're going to fall down a bit lower, come back, retest at least 47, 48. Fall down a bit. But of course, all of that can completely be changed if we close above 53. But yeah, a lot of these indicators here just look completely garbage for Bitcoin. They look overall bullish somewhat for the rest of the market. We could have a day or two of, consolidation, but this is a V-shaped recovery on the SPY and the NASDAQ. V-shaped recovery. The IWM still has some room to go to the upside, but it's hindered a bit because of the new strain of the virus. So we just have to watch and see how that goes. But yeah, essentially that's really it. I hope you guys enjoyed the video. I'm sorry if if you've been watching it till the end. I appreciate you, and I hope I didn't offend anyone. But it is what it is. If you want to make it in the trading world, you have to grow a pair, and you have to not feel the pain. You have to embrace it. You have to psychologically tell yourself, look, this pain, this feeling in my stomach, it's good, because without it, I'm not going to be able to feel the pain in my stomach for 100x this money. I'm not going to be able to stomach a $100,000 loss in a day if I can't stomach a $1,000 loss. All right. And a lot of that comes with disciplining your mind and becoming much more emotionally aware of your emotions and then the actions that you take based off of those emotions. Once you can control that, that's when the fun starts. All right. So yeah, just focus on really hardening your mind. A lot of trading is just psychology. All right. So I hope you guys enjoyed the video. I will see you guys next time. Thank you.